This is Rod Kusin, Spooman for Risk International, here to introduce to you our new RSK Premium strategy. This video is based upon a PowerPoint presentation which can be downloaded at our website, which is RSKsys.com. Our new premium strategy is an automated strategy for trading the Emini S&P 500 futures. The main features contain the strategy settings, retracement lines, a warning indicator, a trading bias, as well as the RSK Premium AVG indicator. The strategy settings contain three different means for entering our trades. One is based upon major intraday pivots. The divergence setting is based upon opportunities that the pivot setting misses. And our third trend setting allows us to enter the trade after the pivot has taken place. We also include retracement lines, which show the exact price to which the market is expected to retrace with an accuracy that generally exceeds 85%. If unfavorable conditions could result in a loss, a warning indicator shows on the screen to alert the trader. Additionally, we have a pop-up window that also provides an audible that informs the trader what direction we believe the best trades can be taken. Then the Premium AVG indicator dynamically updates the thresholds that we believe will provide for the most profitable trades. The premium strategy is based primarily on reading the premium. The symbol in TradeStation is $ESINX. We dynamically read the premium and its relationship to the Spoos to determine precise trading opportunities. The first strategy setting is what we refer to as the pivot setting. Again, it's designed to provide precise trading opportunities where we believe major pivots are likely to take place. The divergence setting, however, catches those opportunities that the pivot settings have missed. As you can see in the two illustrations here, our first trade took place with the pivot setting. That pivot setting, however, would not trade these three additional entries, whereas the divergence setting picked these opportunities up. Here again is another illustration of the pivot setting, firing off long trades at the bottom, whereas the divergence did not. The pivot setting shorted this move at the high. The divergence setting did not. But when the Spoos moved higher, the divergence setting fired off a trade, shorting the market, where the pivot setting did not. Here we compare the pivot setting to the trend setting. The pivot takes place here. The trend is now down, and the trend setting picked up short trades here, here, and here. Again, the pivot setting has already fired off its best trade, and now to enter a trade after the move has taken place, the trend setting makes that possible. One of the major features of our strategy is our retracement lines. White lines indicate retracements that occur above the market, whereas the magenta lines indicates retracements below the market. These retracement lines are generally over 85% accurate. In the illustration shown here, they're 98% accurate. The value of this can be experienced wherein retracement lines can aid the trader to know when not to trade. In other words, if the market is moving up into a retracement line, it may be best to wait for the retracement to be hit before entering the trade. Or these retracements can be used as a profit target. In either case, the strategy settings allow us to determine whether or not we want to use these retracement lines, and if so, we can establish how many ticks away from these retracement lines we need to be in order to take a trade. The warning indicator, as shown here, shows up as a series of colored dots. In a short trade, yellow dots indicate that the market is moving against the trade, and therefore action should be taken to protect profits, either by way of tightening our protective stop or exiting the trade. Long trades, once entered, if green dots appear, that also indicates warning conditions that suggest the market may be moving against that trade, and again, action should be taken by the trader to protect his profits. The strategy also contains a means to establish a profit target, protective stops, as well as break-even stops. Finally, the premium AVG indicator allows us to determine at what threshold the premium will most likely be for the best short and long trades. Those thresholds are dynamically updated throughout the day. On Monday, November 8th, 2010, the pivot strategy pulled the following trades. Using an 8-tick profit target, short trades were entered very quickly after the market opened. We had our first long trade at approximately 850. Those trades were in jeopardy as the market continued to move down a few ticks, but ultimately captured their profit target. We had another short trade here at 9:27, long trades shortly after 10 o'clock, and then we had one last short trade which just barely moved down to one of our retracement levels, and that was the total number of trades taken by that particular strategy setting. Each of the trades were successful, and here's what we see in the way of the strategy performance report and the accompanying equity curve. The divergence strategy gave several long trades shortly before 9 o'clock. All of them hit their profit target. And then we only had one other set of short trades that took place about a half an hour or so before noon. And once again, those trades all hit their profit target. You can see from the standpoint of our retracement lines that they too extremely accurate, 98% accurate for Monday, November 8th, 2010. other features of our trading strategy also incorporate or can incorporate the use of volume information, volume bars, using a variety of different volume indicators and indices. That subject will be discussed in another video. Learning how to read the premium can be one of the best investments a trader could ever make. There is no indicator out there today which is any more accurate than what is available by reading the premium. The trick is learning how to read it correctly. At Risk International, we teach you how to read the premium, and we incorporate those rules directly into our strategy. So come to our website, ask for a demo, comment upon our videos, and give us a try. I am certain that learning the techniques that we teach at Risk International will help you to become a more profitable trader regardless of market conditions. So once again, we invite you to give us a call and ask for a demo. This is Rod Goosen and Spooman for Risk.